Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partner broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
All right. Hey, everybody. Welcome back to another live stream. First one here back in the office at the studio. Full setup again. Camera, good mic, lighting. It's good to be back, man. It feels like forever since I've been at my streaming station here. Got a fresh shirt on for you. New shirt, by the way. Very, very Greek colors. I was in Greece, in case you hadn't heard that already. My sister got married in Greece. We flew out there. It was absolutely beautiful. So this is officially the first live stream back in the studio. I've done a couple. We did a little work from home session last week. We had Hurricane Helene in the southeast, which I just didn't want to make everybody drive in and potentially have to turn right around just because of the potential for bad weather. But behind us now, we're back in the studio and things are good. So good to be back. It's freezing here in the UK. It's been a little cool in the US, or at least in Atlanta, but it's at a really good temperature right now, man. You go outside and it's just like, oh, it feels so nice. We played pickleball yesterday. My wife and I went and played with my sister-in-law and her boyfriend. We had a really great time. So loving the weather, loving things like that. Anyways, guys, let's jump into some markets here. This is a big week. Actually, a very big week. I put out an announcement just to recap what we're looking at. Let's go to the announcements section. By the way, you guys can join the Discord if you'd like. We'll drop the link here to apply to join the Discord in the chat right now. You can fill that out if you'd like to join. They do have a free version and a paid version. A couple things to consider for this week. A few key news days this week. Monday, today Powell speaks a little bit. Could be market moving. Tuesday, you've got manufacturing PMIs, JOLTS job openings. Wednesday, you've got ADP numbers. Thursday, you got services PMIs and unemployment claims as always. And Friday, we got the big one. We got NFP. So we got jobs data this week. We got PMI data this week. We're going to get a good read on the state of the economy this week. And so as traders, how can we prep for that? Well, we can focus on price action going into these events, and we can focus on the potential trends that those economic data points could create for us based on the macro, based on the circumstances that we see. So let's get an overview of where we are at in the markets. Currently, the S&P 500 is just off of its all-time trading highs. And whenever we're at all-time trading highs, whether it be gold or a currency or indices, many people start to get very scared. In fact, many people get very bearish just because you get to an all-time high. But let's not make that naive mistake. That is a beginner mistake to say, oh, it's at an all-time high, sell it. Not a good call. Why? Well, let's look at the track record. If you had sold all-time highs on the S&P 500, you have been underwater all year long. And we can repeat that same theory when we look at gold. Gold, if you've been short this year on gold, you've lost money. Why? Because gold's up like 33, 34%, even with this little pullback that we're seeing so far. Now, hear me out. I'm not saying you just go buy all-time highs and just, let it keep going. It's not what I'm saying either. We still want to be strategic. We want to be practical. We want to wait patiently for the right setups. But don't let the fear of it being at an all-time high keep you from having a sound reasoning behind what you choose to actually do. Is the stream lagging a bit? Somebody let me know. Are we okay? Thank you for your 2 cents on the reality of trading. Accountability changed it all for me. Thanks, Ronaldo. I appreciate it. And thank you for supporting the show, watching, just by people tuning in. And if you could hit the thumbs up button on the stream, that would help a lot too. I do these shows. Your screen is lagging. Okay, guys, let me know. I'm drawing a line right now. Is it lagging? I'm drawing a star right now. Let me know if my screen display is lagging. Okay. Someone got a little tan. I got a little sun. Okay. No lag. Okay, now you guys are just confusing me. Chandler or James, can one of you guys tell me? Because I'm getting mixed responses from the crowd here. Anyways, I can reshare it. Okay, there's some lag. All right, let's give it a shot then. Hold on. I'm going to reshare my screen. 1 second. Okay, let's see if that's any better. I'm swiping left and right. There we go. I'm not sure why that happens. Sometimes I think it might just be my computer is tired. I'm not sure, but this computer is kind of a beast, so I don't think it's that. I think it might be a StreamYard thing. Maybe it just gets out of sync sometimes. Anyways, back to my conversation about all-time highs. So how do we actually play this? Well, I'll tell you what I do, because you should find your own way in this world, but this is what I do with the markets when they're at all-time highs. I wait. And if I'm in positions, I'm letting them run, because this thing could just keep trending higher for a while. And if that happens, then it happens. I don't have a lot of positions on the indices right now. I have some stocks that I own, some options that I've done on stock market side of things, but specifically to the indices on a momentum trading basis, I like them long, but I'd like them for actual entries if we were to see pullbacks. So I'd probably buy the S&P 500 on a dip down into this area or a dip down into this area. In fact, I'd probably try at both levels. And what do I mean by try? Well, I mean, I don't know if this level is going to hold. We could come down here, fail out here, and perhaps see, a rough October month. But I'd still be a buyer for the end of the year kind of concept. Because right now where I see things, I don't see things falling off a cliff. For me to get outright bearish on the stock market, let me show you what needs to happen for me. This needs to be like almost all red. This is my quote unquote holy grail for economic data. This table right here. It really summarizes just about everything I need to know from a macro standpoint. If this is a bunch of blue charts, then that means the economic readings are beating estimations. And if these are a bunch of red charts, they're missing expectations. Now, guys, this is really big. This week, these two metrics report, and so did these two metrics report. It's a huge week because that has the potential to all turn green, or we could stay red and actually see unemployment rate turn red. That would be, so last time unemployment rate came out, it came out better than expected, which was why this is blue. And the last time around, PMI numbers came out weak, which is why these two things are red. So keeping it very simple, these are economic data points that give us a pulse check on how the US economy is performing. We want to see, compared to forecasted values, strength in order to be confirmed that, okay, the economy looks good or it looks okay. Right now, it's very mixed, which is where I've been at for the last month and a half, right? I've been very mixed on, my thought process on the stock market. So what I'd like to see for possible trades would be a dip across markets and for this to stay mostly blue. Keeping it really simple. The Edge Finder is currently giving us a neutral reading on the S&P 500. So for stocks, waiting for a pullback. If we get it, great. If we don't, I have nothing to do there. Hopefully that makes sense. That's all I wanted to say about the S&P for today so far. Let's take a look at gold. So gold, here's what we want to see for gold. So for gold, we've had a really strong run up. Price action shows bulls are still very much in control of this market. Many different metrics you could use. You could apply moving averages, beautiful uptrend. We've strayed a little away from the moving averages, so we very well may see, a corrective pullback. But to think that this is a bearish, there's just a straight bull trend, right? This is a incredibly strong trend for gold. That doesn't mean, though, that it can't take a break. And in fact, I think gold, I would not be surprised if we do take a bit of a break. So you have jobs data coming this week. And for NFP, what does gold really want to see? Well, in my view, and the way the Edge Finder is scored, which is, of course, our scanning software that I just showed, if this is a not great report for NFP, that's going to be good for gold. Okay, so why? Remember, gold typically thrives on a weaker dollar and weak global economies, because weak global economies lead to central banks pumping money into the system, creating more fiat currency to try and save the day. More fiat currency makes the value of, risk havens like gold go up. If there's more dollars in circulation, the value of gold should theoretically go up. It's not exactly perfect like that, but that's the idea. So as we look at gold here, trading higher into NFP week, if we get a big pullback, I'm probably going to look to buy that dip if NFP is confirming. Now, again, a lot of traders will only focus on the technicals, which is totally cool if that's what you like to do. But to me, I feel like I'm trading blind if I don't have the fundamental story in tandem with the technicals. This chart is going to look really overbought if NFP comes in really strong this week. Okay, that's my opinion. If NFP comes in like red hot, like, oh, we got a strong jobs data point, you'll probably see gold correct hard. Now, I'm not saying that's what I think is going to happen. So that's what we need to be aware of. Now, I understand sometimes people will watch my videos and they'll be like, Nick, you're kind of talking out of both sides where you actually think it's going to go. So I do as little forecasting in the markets as I possibly can. I look at what's actually showing up in the data, and I look for pullbacks in strong trends that I think the fundamentals confirm. So I like gold to the long side. I'd like to see this thing pull back, and then I'd look to buy it. That's how I'm looking to trade gold. Maybe this level, but the reason I can't just say, oh, I'm going to buy here with a stop loss here is because I don't know what the fundamental story looks like at that point. Fundamentals play a very key role in whether or not I choose to buy or sell something. So I can't tell you, oh, this is where I'm going to put a pending buy limit with a stop loss here. It's going to be easy money. No, right? I got to look at what we are dealing with at the time that we do get that pullback. So, yeah. Okay, so just a heads up, just because I mentioned this a couple times so far, if you guys would like to get access to the Edge Finder, if you'd like to apply for a trial, we'll drop a link here in the chat to where you can get access to a Edge Finder trial. Let me also mention this. The Edge Finder trial is not free. If you're serious about trading and you want to get access to our data, we've worked incredibly hard over the years to build this into what it is today. If you'd like to access our data points, it's not free. Nothing in this world is, and building these sorts of things is certainly not free. That being said, we do offer a 30-day trial period where you pay a small amount of money towards your final purchase. Now, your trial basically is you pay $199, and then you get 30 days access. And at the end of that period, if you choose to buy, you get the full product minus the Edge Finder trial payment that you made. So if that's something you're interested or you'd like to learn more, you can apply right here, and we'll drop one more link in case you have questions or you'd like to ask about more details about that. You can chat directly with a member of our Edge Finder support team by clicking this link right here. So this will connect you to a member of our team if that is something that you're interested in setting up. So, and while we're on the top setups page, a couple things here. Lots of currency pairs currently. Nikkei is back on the bearish watch list, but I don't like the price action there. The Australian dollar, the pound US dollar, the Kiwi dollar. I'd like to look at those a little closer, just see what's going on. Also, I had a question for you guys. Is anybody else's Fibonacci retracements doing weird stuff this morning? I think TradingView might have like a bug or something on their software. Can you guys try that on your... Did anybody else notice this? If you try and draw a fib, it's definitely bugged out for me at least. I'm curious if that's the same for other people as well. Anyways, the pound US dollar looks pretty strong. If it pulls back here, I do like it for potential long setups. I'm staying pretty bearish on the dollar at this time until further notice, until you get some sort of real strong... Okay, other people are yeah, other people are seeing it too. Okay. What was I saying? Yeah, so anyways, I do like pullbacks on the pound. Nice confirmation from the edge finder as well. So I'm definitely keeping an eye on that one. Pound US dollar, NZD US dollar. Let's take a look at the Kiwi dollar. Yeah, look at how weird my fibs look. That's so frustrating. Kind of already got this pullback into play, but if it comes back, I'd be potentially willing to try that out. Trayvon, what's up, man? If you'd like to get access to the signals, here's the best way to do it. We'll drop the link to chat directly with our support team. Definitely easiest way to find out current discounts is to connect with a member of our support team here and just ask them what current discounts are available for memberships, and just build a relationship with one of our team members, and they will happily keep you up to date with that. But yes, I'm sure they can get you some good discounts if you message them. Screen is lagging again. Okay. I don't know what's up with that. It might be my computer. I'm not sure. S&P 500 out of the gate here. Look at that little pump. I don't know if you guys have been keeping up with this one. This has been the most crazy one to watch. The Chinese stock market is absolutely flying. FXI is a ETF that tracks the large cap China. Look at that thing, up like 30% in a few weeks, or like not even a full, like 2 weeks. Crazy. NASDAQ's bouncing here a little bit off of its lows. We'll see how that plays out here today. Russell is back to flat territory. Dow Jones actually down this morning. I wonder what the divergence there is from. I'm just curious on looking at some Dow stocks just out of curiosity. Yeah, I think for me, when I look at the NASDAQ as an example, I do like this on the long side, but nothing to do here. Got to wait for pullbacks. Got to see if it wants to, trade lower first, just to give me a little bit better of a risk reward setup. Why do traders hate support and resistance? Nothing works perfect. Nothing works perfect. So people hate everything because they're like, support and resistance, it doesn't work. Well, sometimes support doesn't hold. Sometimes resistance doesn't hold. But I think you've already lost if you think like you only need to look at support and resistance to make like endless money in the markets. It's just not that easy. If everybody could draw this level and make tons of money doing that, everybody would do that, right? We use our brains. You just start realizing like, okay, it's got to be harder than that. It's not just draw a support level, buy at support. Now, from a technical perspective, that's about all I think I need. But beyond that, risk management, fundamental analysis, trading psychology, those things are much harder than drawing zones and trend lines and support and resistance. I honestly think technical analysis is the easiest part of trading. The easiest. Having capital is hard. Learning what true risk management looks like is hard. Fundamental analysis is hard. Psychology is hard. Technicals are easy. right? You just draw key zones and don't over fixate on it. That's the biggest mistake I think I see most traders doing is they hyper fixate on technical analysis and make it out. They overestimate the abilities of technical analysis and underestimate the importance of being properly, having proper capital, managing risk appropriately, all those good things, all those boring topics. Technicals are more fun because it's just exciting, like draw zones, buy here, make money here. But maybe that's why most people lose money in trading. Russell's back to flat on the day. The Nikkei is up 1.4. Again, China is flying up 3%. At one point, China was up another 6% on the day, which is crazy. I did have a silver long position. I ended up trailing out for a profit on this one. And we've come down from there. I'm not planning on re-entering that trade because I don't have a setup on the Edge Finder. But if gold or silver sets up on the Edge Finder, I'll definitely be watching that. Why doesn't Nick analyze gold? I analyze gold many times every single day of the week. Speaking of gold, here's a little macro analysis on gold. So just like we have that chart for the indices, I did get this one built as well. This is the gold macro chart, gold and silver technically. So based on what US economic data is looking like, this is how it impacts gold. And you'll see this is pretty neutral. So this week we get manufacturing PMI data and services PMI data, which could mean this could turn red. So if you get really strong PMI numbers this week, gold probably trends lower. And in that case, I probably wouldn't be bullish on it at that time. Because this would turn red. If this turned red, if these two variables turned red, meaning PMI data comes out strong this week, which is not a positive thing for gold and silver, we might actually even be more on the bearish side of gold. As long as not only do we get a pullback, but we start seeing breaks of support. So let me add a clause to that. If we get a very strong economic data point week, then gold's probably going to come down. And I would not be bearish on gold between here and here. What would make me bearish would be something like this, a break of structure, retest, break of structure. Like if we start seeing an actual downtrend form, then the fundamentals and technicals would align. Right now, for me on gold, this table really keeps it so simple. This is pretty mixed. So for gold on the macro side, I don't have like a really strong opinion there. Because you're going to get rate cuts, but the economy's not falling apart. So it's almost like that soft landing is okay for gold, but it's not like the ideal. The ideal for gold, what is the ideal bull run environment for gold? Elevated levels of inflation. So commodity prices are rising. Economy is very weak. So people are scared and they're looking for alternative investments rather than just pumping money into stocks or bonds. Gold becomes very attractive, right? We're not quite there. We don't have an economy falling apart. We do have the Fed cutting rates. So you want rate cuts. You want either rapid rate cuts or high inflation. And you pretty much always want, for gold bullishness, weak economic reads. So we don't have the weak economic reads data points. If we were getting a bunch of those, then this thing would be bright blue and we'd have bullish setups on the Edge Finder again. So again, this is why the macro matters so much, is because again, it could keep us from jumping into trades at the wrong time based on the macro. If you're ignoring the macro, you're ignoring like the real thing that drives these charts. So why did gold go up so much this year? Because this year, the market is now very much expecting rate cuts, which is why the dollar is so weak on the daily chart. Dollar's really fallen apart here, which has given a real good runway for things like gold and silver. But again, the changing story there where economic data points for gold and silver to rip through the highs again, I think you need to see economic data come in weak so that the Fed is going to cut rates faster. Does that make sense? Again, if you'd like to get access to these tools so that you can check on these for yourself every single day, again, don't ignore the macro. If you ignore the macro, it will slap you in the back of the head. So get yourself access to the Edge Finder. That is, of course, what my company does. We build tools so that you can actually keep a close eye on the macro. If you'd like to get access, send us a direct message here. Someone from our support team will answer any questions you have. If you'd like to pay with crypto, if you'd like to try it out for 30 days, if you'd like to ask some questions about how the software functions, we have a free course on the Edge Finder. Just send us a direct message right here, and someone from our support team will help you out on giving you some answers about how the Edge Finder functions. And yeah. Okay, I think we are now set to change gears here. We're going to have Forex James join us on the show here. So stick around. We will be right back after we thank our sponsors and get the camera switched over to James and I. So stay tuned. We'll be right back. If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out, in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show. All right, we're back with James. Hey, James, what's going on, man?
Hey, Nick, I'm great. Thank you. How are you?
I'm good. It's good to be back on the show with you for a minute. Just wanted to jump in here and say hello. I feel like we haven't spoken in a while, and also just get your thoughts on some charts. What are you? I saw actually your video on Sunday. You were talking about copper. What are your? Can you share with us your thoughts on copper?
Yeah, absolutely. So I'm looking for essentially two different approaches on copper. So I'm looking for an intraday position on the H1 here, looking for potentially a reversal at the 200 moving average. This is basically just a technical setup. And we've got the RSI here that's becoming oversold. We've got very minor support through here. So we might be able to catch just a small intraday pull. And then the second approach, if this fails, is a more long-term swing trade here. So we're looking at the daily. So we can see we've just rejected the 4.6 level roughly, rejected it quite aggressively, really. So if we draw the fib from low to, actually I need to just slightly adjust that, from low to high, we can see through sort of the 50% to the 0.618, we've got another level of structure that could act as quite a nice support. So yeah, I still remain bullish on copper. There's not really anything, in my opinion, that is standing in the way. I mean, you know, weaker China data could come into play, but for now, I'm still relatively bullish.
I was going to say on the China front, the big pop in the Chinese stock market could turn out to be a positive thing for copper as well, I would imagine, just because if you do get the Chinese economy, which of course is a very heavy manufacturing economy in the world, if you get China starting to pick up again, the demand for commodities, both oil, copper, silver, all sorts of different things, iron, all those things could very, very heavily be seeing a bit of an upside move. So I don't hate the trade at all. I think, especially if you think globally, the world's not going to go into, a big recession, copper starts to look interesting from strictly a commodities play. That's a pretty pure, industrial commodity play. So
Yeah.
I thought that was interesting. That's what stuck out to me on your video. What else are you watching?
There's a few really. So we're looking at gold. Obviously, I think most people have eyes on gold at the moment. So yeah, just still looking for some sort of pullback, which we seem to be getting today, which is quite nice. I'm still a little bit jealous of your gold trade. We were in very similar positions, except I was a bit too aggressive with the trailing stop there. So yeah, just looking to get back in, whether it's from profit taking or a slight weakening in some of the global factors. I'm not too sure yet. Let me just take a look here. Pound Swiss is also one that is very, very good, mainly driven by a central bank divergence. So I'm sure, as you know, the Bank of England held their rates. The balance of trade from the Swiss is weakening. We've got the Swiss that's viewed as overvalued, which the Swiss National Bank isn't overly in favor of really for the long term. We've also got the Swiss National Bank cutting rates. They just cut 25, so they possibly will cut again in November. So this one could be quite a solid long-term trade.
Yeah, no, I like it. And I've been keeping an eye on the currency side of things, looking at the dollar, the Swiss franc as well. The other one is, of course, keeping an eye on the yen, just because, again, this kind of signals the Bank of Japan. I think they just had some big leadership change, and the guy is perceived to be a bit more of a hawkish banker, meaning, willing to let the yen stay strong or do what it takes to keep the yen strong, perhaps hiking rates, things like that. So might be an interesting change. You can see the big reaction here. It doesn't look so big on the daily chart, but big swing lower on that was Friday. So we'll see how that comes into play, because of course a stronger yen could be an interesting thing for global markets. If you get a big strengthening of the yen, that can sometimes be a bit concerning to global, margin call, global borrowing costs, etc. So
yeah, well, that's the big thing. I mean,
around.
sorry, I didn't mean to interrupt you there. But yeah, the yen for so long has essentially just been a short the yen, buy everything else, really. So the fact, if hypothetically, if the yen strengthened very, very quickly, it would have a ripple effect, I'm sure, as you know, across a lot of different markets, affecting almost every trade, whether it's retail or institutional. So it would be obviously maybe beneficial for Japan, but very negative, I'm sure, for a lot of the world or a lot of the banks. We'd see stock markets, we'd see currencies, we'd see all sorts of things go a little bit pear-shaped for a while. So
Yeah.
I think anyone that's looking at the yen, I wouldn't suggest we're suddenly going to see it rocket. I would suggest, if you are looking, maybe we'll see a trickle up to the upside over a longer period of time. But yeah, for now, I think it should, in theory, be a stable move rather than something that should just spike.
Yeah, no, good points there for sure. And always one to keep on the radar, just like you said. Everybody keeps an eye on gold. The yen is also, even if somebody in the audience is not a currency trader whatsoever, I think if you're going to look at two currencies, it's first the dollar, second probably the yen, because the yen, usually holds the key on kind of global sentiment. So definitely worth keeping an eye on. James, I'm going to let you take over the show here for a little bit. Before I step out, I just want to mention to everybody listening, if you like James's commentary and his very clean charts and you'd like to keep up with him more, we'll drop the links to his socials as well as to his website where he offers different services, elitetraders.io. James, you got it from here. Thanks very much for coming on.
Thank you, Nick. Cheers.
All right.
So, guys, we are looking at quite a few different things. We've already covered copper and gold. The next one that I'm paying quite close attention to is the pound against the US dollar. So the reason is, as I previously mentioned, that we've got the Bank of England holding their rates at 5%. We've got the Fed, obviously, which just cut 50 basis points or 0.5%. We also have likely another rate cut coming in November from the Fed. So we've got quite a nice central bank divergence here. So essentially, we'd just be playing that. We've got relatively stable data coming out of the UK or the United Kingdom. So overall, this trade looks very, very simple. Even if you look at the trend, if you watched any sort of technical analysis tutorials or anything trading related, you'll know trends are always drawn in a very simple uptrend. And this is one of the rare times where it is actually just that simple in the markets. If we look at the pound index right here, look at how smooth the trend to the upside has been. So, sometimes if something looks too perfect, it's normally something is wrong. So this trade might be one of those, a catfish trade, as you could call it, where, it looks great and then it's not quite as it appears. But for now, the trade seems okay. So I'm looking to enter on this 50% level, which coincides quite nicely with this trend line, just simply following the trend and the central banks. Right now, it's just broad-based by Chinese companies. You will earn money. That Chinese stimulus hasn't even hit markets, and Chinese stocks are up so much. Imagine when stimulus money hits. Yeah, Jacob, that's a good point. Could be interesting. Greetings, bro. Trading stocks, long, short. Do we look at domestic data, underperforming / overperforming stocks, earnings, economic cycle, central bank mandate? Honestly, for stocks, you're asking the wrong person. I am just a currencies trader in commodities. So I can't really tell you anything. The most I know about stocks really is just looking at earning reports and projected earnings. And potentially, depending on the stock, seasonality and historical data can come in quite nicely. But yeah, obviously for the indices, you would need to look at the central banks and interest rates and things. So there you go. So moving forwards, Brent oil seems quite nice to go to the downside. So I've been stuck. Well, not stuck, that's probably the wrong word, but I have been looking to go long on oil. I've now changed that idea to go short. So we've got, now this is also something I should probably say, is if you see a market gap on TradingView, you need to double check it with your broker, because market gaps can be either real market gaps where prices fluctuated over the weekends and opens at a different price, or there's a market gap where it's just a difference in data, essentially, with your broker. So just keep that in mind if you are trading using market gaps. However, with UK oil, there is one here on just the TradingView. Again, I haven't actually checked it. not practicing what I preach here, but there is a market gap on the TradingView one here. So looking for the 50% pullback into this level of structure, we can see through here on the H4, slightly roughly drawn, but you get the idea. Looking to take it down to sort of 66. But yeah, very simple. Again, just trading the trend here. So the reason is, despite long-term optimism, Brent oil faces short-term downside risks due to a projected supply surplus and weaker demand from China. Goldman Sachs forecasts a gradual decline in oil prices as supply increases from the US, Brazil, and OPEC plus countries. Additionally, global growth concerns, particularly in China, could weigh on oil prices. So there you go. I mean, oil is actually a very simple thing to trade, really. It is just supply and demand, really. It's, if they're cutting the supply, then demand goes up, prices goes up. If they increase the supply, demand goes down, prices go down. Obviously, there's slightly more to it than that, but generally speaking, it's normally quite an easy one. Touch the 0.5 fib on my broker. Yeah, this might just be a data difference. It probably is if it's touched on your broker, which is fine. So next one is the euro pound. Now this one again looks like a perfect trade. Really, we're looking for this break and retest. You can see we've got this really nice level of what was support on euro pound, looking for the break which we've had, and just a very simple retest here, which would line up with the 0.618 and the 0.5 level here. Looking to go short, as we are seeing slightly weaker data come out of the Eurozone, and we've got the European Central Bank likely to start cutting rates. And the Bank of England, to be honest, seems quite stable. And even if the Bank of England does start cutting rates, it's projected it will be quite slow and steady rather than anything too aggressive, which again relates back to the pound dollar trade quite nicely. We might, if we do see a pullback, be able to get something to hold into sort of the end of the year, so Q4 2024. So let me just see what else there is here. Euro dollar. So I'm not going to trade euro dollar, but on my side of things, it is reading as short. So the reason is the Eurozone is struggling with weak economic growth and inflation concerns, which are likely to force the European Central Bank into further rate cuts. The USD, on the other hand, is expected to remain strong due to US economic outperformance and the Fed's rate cutting cycle, which is projected to end sooner than the European Central Bank. This widening policy divergence between the Fed and the ECB makes Euro USD a solid short opportunity. So we'll see. I mean, I'd probably say that when you hear me reading something out like that, it's because I'm reading it off my research paper. It's not, it's all aggregated essentially from bank reports. So that's why it's on the watch list, but I'm not personally looking to take it. It's just something I am keeping an eye on, because if I start seeing the technicals back that idea up, then I wouldn't be opposed to taking a small or a low risk position and just seeing how it goes. Having said that, if we look on the daily, we've got a really nice resistance through here. So it'd be more of a case of, can this weekly time frame hold up? Can we get either a nice rejection from here and start heading back to the downside, or will we close above and have some sort of break and retest here, start heading more towards what level would this be? Sort of the 1.21, roughly, sort of around there. So that's the two situations I'm looking at. But to be honest, as I said, it's not something I'm desperate to get into. It's more just something I'm watching out of curiosity. Euro area interest rate is 3.65, which is also good going down. Yeah, I would say buy Euro USD on pullback. Yeah, so that's the thing. At the moment, I'm more on the side of buying Euro USD, but over the long term, it might start turning into a good short, which is why I'm not doing it, because I've got two conflicting ideas here. So, I don't want to really sit in a trade like that. You want to have a look at Bitcoin? Sure. So I say this every time someone asks for crypto, but I'm not a crypto trader. I don't touch it. So what I can do is give you a very basic outlook on the technicals, but I can't really give you much more than that. So I think it should be very clear here that we're moving to the downside. We've got a very clean sort of descending channel, creating technically lower highs and lower lows. So yeah, it wouldn't really be something I'd be looking to buy. Let's see, what have we got here? So I think with Bitcoin at the moment, the situation to buy this would be either if we get back down to the low of this channel, maybe trading it back up and sort of just treating this as a range trading opportunity, or we'd look for the break above this trend, retest, and a continuation to the upside. But other than that, nothing really here in my opinion. Pound Canadian bullish. Let's see. Oh, I didn't take that trade, unfortunately. Let's see actually what's on the Edge Finder. So I've got let's see, Pound Canadian on here. So CAD, USD CAD. It doesn't seem like there's an overwhelming bias for the Canadian dollar. So let's just have a quick look here. 1 second. So overall, the outlook seems to be a little bit weaker for the Canadian dollar in the longer term. So I'd be looking more to go long, following the trend. We've obviously, like I said, we've got relatively strong sterling or pound. So the approach, let's see. It'd be interesting to see if this level can hold up on the H4. It seems to be. We're seeing some rejection here. So, maybe if we can get a bullish candle closure from here, it might be worth trying to take a trade here with a relatively low risk. So I guess you could put stop loss maybe there and go for sort of a 1 to 2 or higher, depending on how you trade. Or we could have a look for a fib and get maybe a slightly lower entry around here. Something along these lines. Yeah, I guess that's about it, really. I don't see anything else. The weekly's on a rocket ship, actually. I've just noticed. I don't really look at the Pound Canadian, to be honest, but what are we up? 30% since 2022. It's not outrageous, really. We've broken above these highs here. We did stall, we've broken. So I guess actually, if you want to be a bit more conservative, you might want to wait and see if we can get a retest of this level here. Although this is the weekly, so that might take a while to get. We might head up and then head back down. So yeah, just pay attention. But it's not something I'm too interested in right now. But that is kind of the way I would see it. Silver, Euro Yen, Euro Swiss, Pound Swiss. Okay. We'll have a look at silver, and then we'll get to the other ones. So silver is very similar to the other commodities at the moment. We can see copper's dropping, gold's dropping, and clearly silver's dropping as well. So the way I trade is always with the trend. So we're looking really to see how can we capitalize on this pullback rather than trying to counter trend it or counter trend trade it. So really, we've actually broken out of this trend line, but I'm not a trend line trader, so it's not that meaningful to me. So let's see. Yes, I don't think the fib's going to work here either, really. I suppose we've got this level throughout here, although I'm not too sure how comfortable I am with that. Let's just see. I suppose it does extend back to July. Okay, so if I was looking to buy silver, I would need to see this H4 candle. It's only just opened, so I would need to see it flip and close bullish. So if we can see this candle change, go green, close after this after the 4 hours, then I might start looking to take a long position from here. Stop loss relatively tight, just below this previous low at 30.37. So somewhere like this, take profits at the fib extension, something like that. If we don't maintain this level and we do break lower, then I would be staying away for now, just because the trend essentially would be broken, in my view anyway. But yeah, I think that's about it. I think the commodities still have a lot of room to the upside. I think this is some healthy pullback. It might even be some profit taking, as we have seen a large rise in a lot of the commodities recently. Euro yen. Let's see. So, as Nick and I were discussing, when we got the news of the new leadership in Japan, we did see a large move to the downside. What was this? Just under a 3% move to the downside on euro yen. That was very similar on a lot of the euro pairs. So it depends really what you're looking for here. If you were looking to go long, you'd really be looking for a correction of this move. So maybe to around here. So the 162.4. The H4 does look relatively bullish here. However, the risk to reward here isn't the best. You'd be going to, kind of a 1 to 1.5. The problem is I'm a little bit unhappy with the yen. I'm not sure where I stand with it because, as I said, they've had a change in leadership it did sound quite hawkish for the yen. And we saw that here. So we got relatively dovish news when we heard that the Bank of Japan wasn't in a rush to start hiking rates. Then we got the change in leadership and we saw the push to the upside. So it's more a case of, can this be sustained? And what actions are Japan going to take? We don't really know yet. So once we get some more signals from the Bank of Japan, then maybe we can start making some decisions. But yeah, for now, I'm not really wanting to be involved with the yen. Euro Swiss. You can see I was looking to go short on Euro Swiss around here. I'm not sure why. Let's see, was it? Yeah, I guess I was looking really just to trade this trend. Excuse me. But yeah, to be honest, I'm not sure how I feel about this one either, just because, as I said earlier, regarding the Swiss, I think there is some bearishness coming. I don't think it's there yet, but it is coming at some point. And the euro, again, isn't doing too hot. So I don't want to end up in a position where I'm in two weak currencies. I'd rather, trade strong against weak or weak against strong. So yeah, Euro Swiss to me isn't really something that seems appealing. USD CAD. Yeah, I do have some analysis here. The Canadian dollar is expected to weaken due to softening growth and lower commodity prices, particularly in oil, which is crucial for the Canadian economy. Meanwhile, the USD is expected to remain strong as the US economy shows resilience. The divergence in economic performance between the US and Canada supports a long and USD CAD. So that's quite interesting, actually. I've got a short drawn up here. However, that does seem to make sense. Although, yeah, again, it's just how do I really want to start buying the dollar? I'm not sure, really, because I'm looking more to see if we get 50 basis point cut again in November. And I don't think that's an outrageous thing to think. It wouldn't surprise me, put it that way. So dollar Canadian really does seem to the upside, as I just said. We've got weakening oil prices, which is negative for the Canadian dollar. So wouldn't seem like a bad position, really. USD CAD, USD and CAD both cutting rates. I would not touch that one. They are both cutting rates. However, the Canadian dollar seems to be cutting rates more gradually than the Fed, which is something to keep in mind. Just because two currencies or two economies are cutting or two central banks are cutting doesn't always mean both are bearish. It goes back to what I've been saying with you've got to look at things relatively. So it might be bearish for that individual currency, but compared to another currency, it might not be the same situation. Would you take a trade if it lines up with TA, or would you wait after news? It depends. So day trading, yes, I will always take a trade based on technicals if I'm day trading. And if it's stopped out, it's fine. I'm happy to get out of a trade in an hour for a 0.5% or 1% loss with having that 2 to 3% take profit. That's completely fine with me. Because remember, my day trading strategy is based on statistics. So I will always play statistics. So it's like if you had a back test that had a 90% success rate, if something very specific happened, I will do the same thing. However, if it's a swing trade, probably not. I like to use news as a catalyst. It's called event trading or event-driven trading. So if I was looking to trade euro dollar, for example, I would wait for something on euro or wait for something on the dollar to trigger that trade and confirm the idea. Now, it's not every time, but most of the time. USD JPY 145 and to rise. Let's have a look. Yeah, I have heard talks of dollar yen rising, but again, just going back to what the situation with Japan, it's just not something I want to sit in at the moment. 146 I could see happening relatively easily. It's not a wild target. We've been there before we had the new leadership. So yeah, we'll see. But again, it's not something I'm too interested in being in. I am in pound dollar, which is actually about to get stopped out. Although I took quite a nice trade this morning on the Euro Australian. Is it marked up here? No, it must be a different chart. Maybe this one. Yeah, here we go. So yeah, I got a nice almost 2% trade on this one this morning. So I don't mind being stopped out on pound dollar. But again, it's just going back to the central bank divergence, playing the statistics of pivot points. And some light economics behind that one. Chris Pulver, good morning, everyone. Good morning, Chris. Let me just check the time, actually. Need to make sure. Okay, Chris is coming on in a minute, guys. So let's just have a quick look on the currencies before I head off. So the dollar is still maintaining the sort of 100 level. I've had this level drawn out for a while because it's quite a significant one, really. If we look on the weekly, it was rejected here, failed to failed to hold above here, failed to hold above again, then was resistance, and finally broke above and was used as support. So now looking whether the dollar can break below and hold below, that'll be quite interesting to see. And if we can, that would be a signal to me to maybe start looking to get into some more long-term dollar shorts. The yen, again, wouldn't surprise me if we could reach 70.9. We did previously, again, before we had the hawkish Bank of Japan, the dovish Bank of Japan, and then rejected quite quickly. But yeah, looking really to see if we can start breaking previous highs. The pound index is moving quite nicely to the upside. It's quite smooth. So yeah, the overall markets look quite simple, especially now we've got quite heavy pullbacks on some of the commodities. As long as we can see the overall trends continue, it should be smooth sailing, really. So guys, I'm going to head off. It seems like Chris is here, so I'll let him take over. I hope you all have a great day. Hope you all enjoyed your weekends as well. I'll see you all very soon, and thanks for watching. Don't leave. Got Chris on the way.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. Hey everybody, happy Monday. Welcome back to the session here with A1 Trading. It's 10:15 on the 30th. Happy end of month, happy end of quarter. What you are looking at here, this is ES trade that we have. This is an E-mini futures S&P. I put on a broken wing butterfly. It's in the Discord channel for my Pulver alerts. We're sitting here nearly up full profit. If I took the trade off right now, if I get filled at the mid price, it's about 10 to 15 cents. I took the trade for a 275 credit. If I walk out of here with 265 out of 275, I've got about a 96% profit right now. No shame in taking that. All I'm going to do is probably manage this for later in the day. And the reason why is I can take the profit now and walk away with my 265, and that's still a great trade. There is a chance that I could turn this into maybe from a 265, if I could turn this into maybe another, let's say 30 to 50 cents bonus credit if we get into this profit trap later in the day by, let's say, 2 p.m. today, 3 p.m. today. So if price comes a little bit up on the day, this might end up trading for a credit. So I can take the trade with the credit, close the trade out with credit, give me a net position that's slightly bigger. I'm going to keep the trade open, but I will update. Let's see here in Discord, go to the Pulver alert section. So in my Chris's trade, this will be under the futures trade. We had an ES trade close for profit. The 931's close. Okay, here we go. So I'm going to update this one. This will be a edit message update during live session Monday. This trade is great for 0.05 to 0.15 debit to close for 95% profit now. And I'll update that message and I'll reply to it as well, because I'm going to keep it going a little bit longer. So reply to this message. This is a ES trade for 9:30 expiration. Update. Trade is showing 0.05 to 0.15 debit for a 95% profit target. I'm going to monitor and manage for end of day profits to see if the profit trap will offer additional credit late in the day. Look for final update this afternoon. But if you want to close now, great trade for the majority profit. Okay, so that's updated on ES. China stocks still doing their thing. If you were paying attention to any of that last week, we talked a lot about it. Had some exposure on Alibaba. We are getting a pullback, which I'm totally fine with. We put in a 110 by 105. I'm still good with just hanging on to this. Let me check and see if there's any. I don't think we'd have like an immediate decay on the trade. I'm not that worried about it. It was essentially an at the money trade. So if I go Alibaba here, let's just go this account, Alibaba. There's my 110 by 105. So collected 260 on the trade last week, and it's trading for 245. Not enough of a profit target to me to say I'm going to close the trade out. I don't mind taking on more shares of Alibaba. I'm only in the credit spread here. I'm holding shares of Baidu in my managed accounts. I've got both. So I have shares of Alibaba along with a bunch of other trades. And then Baidu, I have shares along with a bunch of other trades. So, there's $9,600 in Baidu. There's $12,300 in Alibaba. So I'm still going to let those run a little bit. I'm actually happy to see a bit of a pullback. My gosh, we had this thing on the daily time frame, and looking left on the chart, by the way, let's just go through a couple of these stocks. If I'm not really looking to take off any trades on Alibaba or Baidu until these measure moves are hit. So if we get back into this, 121 level, maybe we'll start having a conversation around protecting some profit. I wouldn't mind seeing price if we get some type of pullback. This runs up here. Let's say we have a pullback. I said this last week. A bull flag would be a great thing to look for, just to show that the bulls and the buyers are still very much in control and interested in taking this up higher. Does that make sense? So a bull flag would be awesome on Alibaba. If we get a pullback, I'm hoping the pullback doesn't look like this giant red candle. So let's just hypothetically say for the weekly candle that we are up for the week, like you see here. That's one of the biggest weekly candles you've seen in a long time. The last time we had that type of move would have been maybe early of 2023. That was a pretty decisive candle that obviously all of that was taken back. So as long as we don't see this big rip up and then a big fat sell-off candle to neutralize it, I just want to see if price will stay here. Bull flag would be pretty good. And then we watch our measure moves towards 121. I've got symmetry measured up towards 130. I have some gap fills in some pockets as well, some inefficiencies back around 160. And then a final symmetry if we have a wave, wave 5. If this is a wave 1, all this is wave 2. We're pushing for a wave 3, pulling back again, trying to push for a wave 5. Anything from 130 to 185 would be great. And I'm happy with that. Okay. All right. So that's Alibaba. Baidu, same thing. 110 by 105 credit spread. Let me put on at least a measure move right here. So that level's around 157. We're trading at 110. I do like the upside potential. Just dollar per share. If I could get a $30, $40, $50 move to the upside on Baidu, that'd be freaking sweet. So I do like Baidu for that. The other ones that I have, we have some FXI, which is also pulling back after last week, but did a 31 by 30, did a 30.50 by 30. We're trading at 32.50 right now. I'm still long. This measure move is up to around 33. Hopefully we are going to see this break. If this is a double bottom and we break this center high, I'd like to see FXI continue to go higher. That is the measure move right there towards 46. That's a big upside, by the way. Okay, for large cap China, for large ETF, that's a big move percentage wise. I don't know if we're going to get that move. I hope that we can, but I'll keep an eye on this one just in case we have a rejection. And, if we don't hit higher highs, then there's a halfway point in this range. And obviously this could be resistance, support. And if we reject off that, we come back to the halfway point. We neutralize this candle from last week. Halfway point maybe offers a bounce, maybe a range trade. That's kind of worst case scenario. Otherwise, it's pushing up and a little bit of a pause goes a long way for a bull flag. And then we look at fresh breakouts and we're not chasing, but we are expecting to see this move continue to go higher. Okay, the other one that I'm in, some K-Web, 35.56, back up towards measure move highs. I like this trade if we just put a measured move here. So from low to high. Let's see if we can get a move into like the 18127. Some previous structure This isn't too bad. Up into these like high 30s. High 30s or $40. I'd be pretty happy taking some profit on K-Web. If we get a 5-wave move, this is 1. All this is 2. We're still kind of pushing through wave 3. And then one more wave 5. Wherever that finishes, somewhere in this kind of cluster of price between like $45 and $50, I'd be pretty happy. There's also a lot of inefficiency right in here. But that's wishful thinking that this is just going to melt up. My timeline on this China stuff is probably going to be like 1 to 3 months. So whatever type of gains I can see in the next 1 to 3 months, pretty happy with taking some profit on China. That's about the exposure that I wanted. Now I say that like, if you think about this is what's crazy about trading, being an investor. I've been sitting in this trades for over a year and thinking about potentially getting paid to my profit targets and my measured moves within 1 to 3 months. It's kind of wild, but if that's what the market's given me and that's what it's offering me, I'll take the profit. I'm not sitting here trying to be like long term when the reality is if my measured moves are getting hit, I'm going to take profit. So it's, obviously taking a lot of patience to get to this point, but the fact that the market is cooperating, I'm just trying to stay out of the way and make sure I can hit the profit targets that I'm looking at. Okay. All right. So that's pretty much it from that side. I think JD was the other one that was ripping to the upside. I bought some shares around 32.50. We're up to 41 and change. I think, again, a pullback is fine. A measure move is fine. A bull flag would be great. I'm going to keep an eye on this one. JD is sitting up around $11,800. So decent chunk of profit. Have some shares, have some credit spreads, have some puts, have some whatever. A lot of stuff. So I'm just going to let these things play out. 1 to 3 months is my expectation. If they keep going higher, I'm not trying to roll and trying to go further out. It's like I'm pretty good in this like end of the year window. So by the end of the year, I'm pretty much closing things up on China. We'll assess and see where the U.S. is at. I had an interesting stat today. Let me show the screenshot here. I shared this morning in one of my live sessions. Give me a second here. So this guy. So the S&P election year. There's a lot of stuff out there that's being sprinkled around. It's like it matters. I mean, this is 1949 to 2022. So if there's anything that gives us some history, I'm all for it, right? So all election years, and we said this going into this year, if you were, with A1 trading all last year, with this at all this year, we know it's an election year. Obviously, there's already been some election drama with Joe Biden dropping out, Kamala Harris getting nominated without actually going through a primary, Trump coming back after however many lawsuits the guy's dealt with and nothing stuck to him, and now he's running for president, whatever. All election years are here in black, okay, expecting to be positive on the year. The cycle, especially seasonality-wise, look at this October, November. Everybody see that right there? October to November, as we head into the election, even in the election years that are positive, usually there's a little bit of chop prior to the election. So does that mean we have to have a down move? No, it doesn't mean that, but it would make sense over, a 72-year pattern that the market probably has this for a reason. Because there's some indecision going into the election. We know that there's more to it than just the election. We're in an interesting spot with the Fed. They just cut rates 50 basis points. They're likely going to cut another 25 by the end of the year. So the Fed's looking at a pretty aggressive 1% cut roughly by the end of the year. With an election, right? With earnings season, with employment news that the market's going to be sensitive to, with inflation data the market's going to be sensitive to. So is this always the same and having this, I'm super confident this is going to be what's the year plays out to be. Not really. There's a lot of other factors that build into what is the market going to do at the end of the year. Is it going to be higher or lower? I would imagine that if the market can, tolerate and digest good employment news that we'll see this week. So we have non-farm payroll this week, right? On Friday. So Friday's non-farm. This week, we do have some PMI numbers coming out of the U.S. So Powell's due to speak this afternoon at 2 o'clock. Tuesday, we have Eurozone CPI. We have ISM. What's the manufacturing PMI numbers coming out of the U.S.? We have job openings as well for the U.S. at 10 a.m. Tuesday. Wednesday, ADP is a non-farm payroll precursor to Friday. So forecasting 124. Last one was, what was the forecast? So 144 was the previous forecast, came in 99. You know, not ADP has never been like a big. It's never been a big. I'm never like trading ADP non-farm on Wednesday. It's interesting to see what the print is. Is it, you know, higher or lower than expected? But Friday is the big one. So, you know, light data this week outside of the PMI numbers. If there's going to be any type of reaction, that's at 10 a.m. tomorrow. And then Thursday, we have unemployment claims, which will continue to be a sensitive spot, making sure that our unemployment claims are staying relatively quiet, okay, or calm or consistent as opposed to spiking higher, trending higher. And then non-farm payroll on Friday. Average hourly earnings expected to be 0.3, non-farm expected to be 44, and unemployment rate, which is probably what the market's more sensitive to, will it be lower? So we peaked that August non-farm print peaked at 4.3. That's what activated the SOM rule. Again, historically accurate rate cut cycles. I mean, all these things. It's like there's a reality check that the market's going to have to deal with. You can call it a recession, but it's probably going to be something else. You know, and the reason why is too many people right now are in the recession band camp or the bandwagon, that if everybody expects it, it's going to be something else. Like the market is very good at misdirection. Everyone thinks one way, the market does the opposite, right? If everyone thinks it should be a bearish market or should be a recession and everyone's positioning for it, what's the pain trade? A melt up, right? A melt up. So I wouldn't be surprised if the market finds a way to melt up and ignore what we think is fundamentally going to rattle the markets. But here's where the market's going to be moving. Okay, look, U.S. employment has to be steady. Okay, so let's chat about this for a second. Priced to perfection. Historically, when you go back to 2020 valuations, 2007, 2008 valuations, 1999, 2000, 2001 valuations, we're not quite overextended at those levels, but we're pretty darn close to them. Okay. So we need to see employment data has to be steady. The market probably doesn't want to see higher unemployment rate, doesn't want to see a miss in average hourly earnings, doesn't want to see a miss in a disappointing non-farm number come out. The market right now wants to see good news is the U.S. economy, job-wise, we're steady, we're stable. U.S. economy, we're still growing, right? It has to be steady. So I'm sure the markets don't want to see any bad surprises with the U.S. right now. Let's talk U.S. inflation. Has to continue to trend lower. This is the concern that I think everybody should be watching through like Q1, Q2 of next year. There's a lot this market can ignore for the next 3 to 4 months. We have an election. We're going to figure out what that looks like. Is it more of the same? Is it going to be a crazy sweep with one side or the other? That's the only thing I'm really concerned with as an election, is if it's all Republicans taking over everything, or is it all Democrats taking over everything? I don't know. That's the only real thing I would think would be disruptive to the markets. If it's more gridlock where, you know, it's divided House, Senate, nobody wins, branches are all checks and balances, it gets passed. Right? We know that pretty much Democrats, Republicans right now in the U.S. hate each other. It's a super polarized system, and you toe the party line. You never go bipartisan unless it's like military, and that's what our country is right now. So is it good or bad? I don't know, but the markets tend to like gridlock. So if gridlock is available, then the market's probably going to continue to do what it does, which is find a way to go higher. But inflation, if we are adding money supply, so the U.S. money supply has gone up, China money supply has gone up, global money supply going up, that liquidity will find its way into the markets, probably causing more of a melt up. And you could argue that that melt up is going to equal some type of asset bubble, some type of deficit bubble, some type of debt bubble eventually. Could be in the near term future. We don't know. But inflation data has been trending lower. You know, we had a peak in 2023. When was our peak inflation for CPI was that 2022, like 9+%, and we had about a year of stickiness around the 3% mark, and then we finally went to like 2.9, and then we printed 2.5 year-over-year CPI. I mean, inflation's been trending lower, but with global money supply, if it increases spending, that's likely going to be inflationary. So I still think the markets are going to struggle to see if asset prices go higher, inflation pressures go higher. I don't know if the Fed can get, or I don't know if we can see the CPI year over year get back to 2%. I wouldn't be surprised if what we see this month might be the lowest that we see in inflation for a while. Let's say we come close. When is inflation, by the way? So this week's in employment news. We kick off earnings season next week as well. So earnings season kicks off with the financials on the 7th. Cash rate for the RBNZ. Here we go. So Thursday, October 10th is going to be CPI year over year. There's no forecast right now. Previous print was 2.5. I wouldn't be surprised if we forecast and we're printing lower. If I go to, let me go to Trueflation for a second. What's the trend here? Right now, if I just go to inflation index. Okay. All right. And again, this is a third party reading. So Trueflation 1.5%. Previous print was 2.5. But what I want you to notice here is look what this is. What is that right there? That's not trending lower. We just went from this big trend lower to then bouncing here in the last 2 weeks. So I could see the CPI reading coming in lower than 2.5. The market gets all excited about it. But the reality is we might have actually put in the bottom, and all of a sudden our inflation is going to be right here. And it's going to remain sticky. But I don't think the market's going to care necessarily until we get through this year, maybe into Q1, Q2 next year. And then the market realizes, hey, wait a minute. This inflation report that we're seeing every month, year over year reading is not getting better. It's not closer to 2%. The Fed keeps talking about 2%. And I do wonder as we go into next year, like, will the Fed continue to cut crazy aggressive like the market thinks it's going to, or will that be a backpedal in 2025? So am I worried about it right now? No. I think that the market will continue to see, better data and favorable data. As long as we don't lose our butts on the employment side, then I think the U.S. market's going to continue to hum along just fine. Okay, but price to perfection, a lot of things are happening here. Employment data has to be steady and solid. Inflation data has to continue to be steady or lower. And I would say that earnings, okay, so U.S. earnings has to continue to, I would say, beat expectations and likely have positive forward guidance. That is the one concern that I have going into this year's earning, or this season's earnings, is if there's acknowledgement of a tightening consumer, or there's acknowledgement of a slowdown, it'll be interesting to see what the overall consensus is. Okay, so and on top of that, we have U.S. election drama, which we know we're going to have it. This week, I think we have the vice presidential debate on Tuesday night. I don't think that's a market mover, but I don't think it will be. But there's obviously, as we get closer and closer, there's more uncertainty. Who the heck knows? Is one side doing some type of crazy Hail Mary thing? I don't know. But there's going to be all these things, right? So this is a lot for the market to be digesting. This is a lot of potential chop and volatility. Once we get through the election, I think the market will look at all these things and say, is it positive? If so, let's go. Okay. If we get through the election and all this is mixed, right? Like a plus minus, maybe the market's a little bit drifting higher, maybe melting up a little bit, but not as fast paced. Or if this is all negative and we get through the election, maybe the market doesn't like it. I would say that if I'm forecasting here, my higher probability is the market's going to find a way to be higher. We're already trading near, I mean, we're at all-time highs, right? We had several all-time highs already hit on the indexes. This is a weekly chart. Let me go back to the daily. I want to say the SPY has crossed over 40 all-time highs this year, which is pretty darn good. Our last high we would have seen on Thursday last week. So Thursday all-time high. Before that, it was the Thursday after FOMC. So we had FOMC right in here with that rejection candle. And then Thursday was a massive gap to the upside. So that was our previous all-time high. And then last week as well. I wouldn't mind seeing some volatility to the downside. In fact, I may look at a short-term hedge. Let me see. Let me look at like an ES, or I'm either going to go ES or MES for micro, but I'm probably going to put on a bit of a hedge. Let me see if I can get back down to like 561 on the SPY. Does that actually, this might be pretty cheap. Let me go to like a 561 put on the SPY. So if I go SPY 561, how much further out do I want to go? I'd like to get through the election. Probably November 15th. It's a good monthly expiration. There should be plenty of volume there. If I wanted to hedge out through November 15th through the election, any type of drama, and if this is something I can take profit on earlier, I'm fine with that. Right now, oh my gosh, dude, $8 for a put. I'm not taking that trade. What's up? The put premiums are really, really expensive. That's a 37 delta for $8. If I did a 37 delta on the call side, I guess it's about the same. Wow. That's just way more expensive than I thought. So let me try something else. If I'm looking at this FOMC low, that's around 561. Let me change this over to the futures feed. I like this gap. I like this gap. This one today, this is going to be a small loss. This is an ES trade. It's going to be a small loss. So that one's done. That one's done. I've got the butterfly that I'll be managing today. I'm going to look at something. So that's FOMC with lows around 56.76. Maybe a gap fill towards like 56. Let me see what that's going to cost me. So if I go, I'm going to go MES for micro and put in, let's go 56.70 in a couple notable levels. 56.70 and a gap fill around like 56.50 or 57. Nope, that's not right. 56. So 56.80. Sorry, my numbers are all messed up. 56.80 would be coming back to hit this FOMC low. If we have a gap fill here, I'd say 56.50. I'm going to look at stacking a couple of long puts on the, this is the micro E-mini futures. And so if I place a long put here and a long put here, all I'm going to look to see if price is going to fall into that gap, these should be valuable. If I give it enough time, I'm probably going to buy it out through November 15th. Let's see what this costs me. It's not super long in the hedge, but let's find out. So let me go /MES here. I want to make sure I do have a couple of hedges already, but let me double check. So here's January, here's February. So I've got some hedges on there. I've got upside and downside on those hedges. Up about $4,500 on micro ES, and then micro NASDAQ. This one is currently all hedged to the downside. All right, so I think I'm okay there. I'll double check that level, but let me go MES. I'm going to put in another trade through November. So MES trade November 15th. All right, so what's this going to cost me? If I do a 56.80, 56.80, I'll probably go a couple strikes. I'll stack them up. 56.80. 56.80 if I buy that strike. Max risk about $450 with unlimited profit potential. I'm not going to set this up as a vertical or a debit spread. I'm just going to take it as a long put only. So that way, if I do have some gamma strikes or gamma pressures going my way, this can increase in value pretty nicely. So 56.80, 56.70. I'll put in about a 0.4% hedge. And I can roughly calculate based on the deltas here. If this becomes let's say this gets to at the money, that'd be a 50 delta. Let me see what this would do. So if I have a movement, I got to do some math here, but this should be an easy way to figure it out. So if we go from 58.40 down to 56.80, that's a 160-point move at a 36 delta. I should be able to add about $57 of credit to these trades. Should be able to. So if I go $57 here, $57 here, that's $100 with a multiplier of 5. That's $500 profit. So if I take these two trades together, that'd be a 56.80 and a 56.70. I'm risking about $800. If I'm dead wrong and price goes higher, then I'm going to risk that, and that's going to be a calculated risk on the hedge side. If we get some volatility where price actually comes back down here, my goal is to turn, let's see, this would be about a 90 and 87.50 debit into probably that'd be what? That's $170, about $177.50 in debit. If I can turn that into like a 250 or better credit. Okay. So I'm looking at that. So I'm going to price this in. So 5680 by 5670 looks like we're trading for about 176. I don't want to sell. I'd like to, but then if I sell it, all of a sudden I'm on the hook for waiting until November 15th, as opposed to just putting on the long puts right now. If price were to drop into this gap, okay, or price were to drop in any way, shape, or form into some type of corrective move, like we had this August 5th low, even something like that. If we drop back down into this trend line, or we come down and find the 200 exponential moving average on like every S&P chart right now, a correction would be great. And so I'll take that calculated move right here on MES and see what I can get for it. So 176.50. This is going to be a calculated risk. Let's go out. Let's see, 175. Let me see what. So let me go. Let's see if I can get an improvement off the ask prices. So 89.50 plus 86.50. So 176 would be my ask price. Anything below that would be fine. Let's see if I get 175. 175. Okay. So that's pending. Let's go 175.25. Not filling. Okay, let's try to get 175.50. Come on, man. All right, let me see what the ask price is. 176 is the ask price. Filled at 175.75. All right. So I'm going to place this in all my accounts here as a little bit of a hedge. Filled. Okay. 176. 176. All right. Filled there. Okay, good. A couple more accounts. All right, that last one did not fill. 176. Let's go 25. Okay. And this one there. All right. So those are in. I'm going to add this into the Chris's trades in Discord. This is a futures trade section. So this will be new trade / MES 11/15 expiration. So it's a buy the 56.70 put. So buying the 56.80 put and buy the 56.70 put. 176 debit. All right. So what that trade looks like is this. My max risk is $881.25. Max profit is unlimited, but obviously there's going to be a potential profit target, unlimited profit, because I'm not selling anything against it. Looking for MES price to hit 56.70 or lower, and I'll be happy with a, let's say, $250 to $300 credit to close for hedge profit. This is a 0.25 to 0.50% hedge on the index to weather any type of downward pressure or volatility pullbacks in the index and the US indexes. All right, so let me post this chart here. I can plot that guy at, let's go 80. Coordinates will be 5680. And then put this one at 5670. That's really close together, obviously. So 80 and 70. So long put, long put. All I need price to do, if I take a screenshot of this, if price were to come down, let's say into that gap area, either this level or even a little bit lower, something along those lines, and look to see if price tests. Okay, so that'll be my screenshot for the alert. And I am in. Okay, so trade is in. And look, I'm not saying that we can't go higher. You know, we might still be able to melt up higher. You know, getting to that 6,000 handle, if SPX melts up to 6,000 before we have any meaningful correction, that could happen. But I'm just trying to fend off if we have some indecision here. And what I'd look for is if we have an aggressive, let's say over the next, you know, the first week of October, as an example, let's say we have like a nasty start to the month of October. If that were to come back down and retest this FOMC low, I'm probably looking to close out that MES trade for profit. Okay. Now, if it gets worse than that, I don't know if I just move a stop loss to break even or better and see if it's better. But if we have a big sell-off candle with a little bit of follow through, I think that's good enough to take some profit because I'm clearly paying for a little bit of time in the trade. I'm letting it trade out through the election. Okay. So any type of disappointment in employment, disappointment in inflation, election drama, or we have some other outlier risk like geopolitical stuff, Middle East stuff, who knows? But I'm just going to do a little bit of a shield to the downside. But I'm trading that through MES. On my MNQ chart, I had this one also out to November. I'm looking at the same type of thing here. If the market is going to maybe be sideways like this, I mean, it does look like we're trying to force some type of trade on the NASDAQ. I mean, we could have this high to low, price just spends all this time pulling back in here. And then, man, that's a big resistance point where we could have a big old failure on the NASDAQ and have a range. Who knows? I don't know. I might have just seen something kind of new there. But I'm hedged out on this one already. I've got an 18,000 long put. I'm looking to see if I can kind of double that up for profit. So if there's any election drama, anything that causes the market to spin downwards, I'm hedged out with some futures trades. Okay. All right. Elsewhere, index wise, let's take a look at everything. Everyone wants to talk about gold, silver. You know, the Dow, the little boring Dow that's making all-time highs. The Russell is actually up today. So look at the difference. SPY's down. It's flat, 0.02%. Qs are down 0.2%. Dow is flat, 0.10 or 10 or 12. Russell's actually up 3/4 or 1/3, 0.35. Again, does this mean the Russell's going to outperform? Not necessarily. I still think these ranges from, FOMC to post FOMC, the market's still trying to figure out and justify, can it go higher or lower? Okay. Volatility index 16.94. We have a bit of a heightened volatility. We're above 15, we're below 20. It's not scary volatility. The market's not dumping because of it. But it is certainly elevated. I'm curious what if Frank's doing anything with volatility. I mean, I'm looking to get long volatility. If price were to come back down into these lows, I'd get long volatility. If price is up into the 30s, I'd get short volatility. But I wouldn't be surprised if we have another event or some type of, let's say a correction where volatility gets back into the 20s and we just see a little bit of elevated volatility over the next maybe 30 to 45 days. Does that mean I want to be long volatility? No, not really. I'm just making sure that I'm hedged elsewhere in the market. Okay, so just keep an eye on volatility. That affects your day-to-day trading ranges, current vol, things like that. And obviously, if the volatility index goes up, we typically see the S&P cooperate to the downside. So that's the correlation. They're inversely correlated. Dollar index continues to be really indecisive. I don't like the dollar index. I can't be any more vocal about that. It's hard to trade. I'd rather trade dollar weakness elsewhere in holding assets long as opposed to trading currencies. I don't think this is a good spot to be trading the dollar. I think this is going to be just a chop fest. And even with the news that we had this week or non-farm payroll, it's like I don't know if the dollar is going to really do anything that we want to see directionally. I think it's going to go down a little bit more and to, tap all these levels for stop losses to get hunted, and then it's going to rip up here but not have any follow through. Just be really careful on the dollar as a forex trader. I think it's a challenging index right now to trade. Oil. We had a bit of a scare last week with this talk of, Saudi Arabia is abandoning the $100 oil price. They're going after lower prices for market share. I'm sure that's a potentially scary thing because I think the U.S. and Saudi Arabia are probably the only two countries that could exist operating at like $40 barrels. Everybody else is, wanting to see 60, 65, 70, $80 barrels. And they're, if we're going to see prices drop, this key support level is right around $65. So it's wild to think that with all of the tensions in the Middle East, we don't have higher prices. With all the crazy net positionings to the downside with oil, I do think there's a potential squeeze up here to the upside. So I still remain a little bit bullish on oil. We do some credit spreads. I've got some other exposure, but I'm still looking at oil to maintain the support around the $60 to $65 zone. Natural gas continues to go higher. I missed the opportunity on natural gas. I was trying to get in here for like $1.75, $1.70. Never came back that low. I tried to retest these lows at $1.65. Never came back that low. I'm not long natural gas. I've said this. It looks like a head and shoulders trade in the works. Okay, and maybe it is, and maybe natural gas is the best trade ever, but I don't think it is. I'm looking to see. I hope this. I hope that we just have some type of wedge, and we see natural gas consolidate. Then I can reestablish some long positions and just stay out of the way with options. But if I don't get that chart and it goes higher, then I'm not chasing it. Gold, 26.34. Interesting pullback on gold. Is anybody surprised? Please don't tell me that everyone bought here at the highs. Okay, we've been talking about this for weeks that we'd expect to see some type of correction in gold. It doesn't have to be a big one. Okay, we're talking as little as, let me change this one over to a 21. There. Okay, look, if all gold does is pull back to a 21 or 50 or 100, I'd love a pullback to get additional credit spreads in. Okay, so 21 is like the most aggressive moving average that I use. I'd love to see it pull back to the 50. Right now, that value is around, we'll say about 25, 25. 25, 25 if we look to see a bounce there. So I'd like to see a little bit of pressure to the downside on gold. I'd probably put in a credit spread right there, see if we go higher. Between the 50, the 100, and the 200, we haven't hit this for quite a while. It's over 200 bars stretched. So the last time we hit the 200 moving average was way back here in October of 2023, and we're extended about 247 bars. Now, the same is true on the SPY. Last time we hit the 200 EMA is way back here, and we're stretched out about 226 bars. So it doesn't mean we have to have this correction. This could extend into the high 200s. This could extend into 300 plus. But gold making the run that it has, it wouldn't be surprising to see just a moderate pullback. Okay, but I do think there's plenty of bid on gold. One thing that's also interesting is global money supply going up, gold tends to drift higher. Global money supply going up, risk appetite up, Bitcoin goes higher. Those correlations have been pretty strong. So if we get a pullback, I'm looking to add some exposure. I'll probably trade GC for a futures trade and probably GLD for a pullback. Silver, Silver, hopefully this pullback is no more than just the structure that I show here on the chart. Resistance, resistance. We broke that. I'd like to see if silver just pulls back and bases, and then we have more upside coming on silver. Same type of thing. Look at how this, nice dynamic support was found. The 50, the 100, the 200. We pull back in this area, let the averages catch up, and see if that offers dynamic support, and then we can see for some higher highs, higher lows on silver. Okay. Crypto Tunnel says, so 26.50 is not possible. I'm in a bad short. I mean, do you have stop losses, dude? I mean, you can't sell the highs with no stop loss. Or if you're in a bad short, where the heck did you short it? If 26.50, I mean, 26.50 is totally possible. What are you talking about? 26.21. I mean, that's possible. I mean, look, I'm talking about a pullback towards 25.25. So, I mean, I'd love to see the pullback towards 25.25. That's 100 points lower. I wouldn't expect much more than that. If we get a pullback towards these moving averages, I wouldn't expect this crazy deep pullback. Even if we do, though, this is well supported. This is well supported. This moving average is also offering some really good dynamic support. So I'm just saying, if we get a pullback, I'm bullish. I'm bullish. I'm bullish. Doesn't matter what level it holds. I'm just going to be bullish and look to add a little bit of exposure to it. Gotcha. Okay, that's it. So that's gold. That's silver. Hopefully silver, like I said, just responds to kind of gathering here on the backside of the trend line. Bitcoin pulled back from the 66.5 levels to 63.7. Bitcoin still looks fairly promising on the daily chart. We're above the 200 exponential moving average, but that doesn't guarantee anything. I mean, it was below it and above it and below it and above it. One thing I have noticed here on Bitcoin is we are making what seems to be slightly higher highs, but we're still within the context of this larger structure, right? So if we have, market challenges the highs, but still pulls back. I mean, I wouldn't mind seeing this. I wouldn't mind getting some more add-on trades in the low 50s if I can get Bitcoin to come back in the low 50s. Otherwise, if it starts to take off to the upside, I mean, the one thing you'd be looking for here would be if we end up like melting up here, breaking above resistance, resistance, resistance. Any type of pullback you get would probably be a good time to be buying. Trendline break, bull flags, right? Once we get on the right-hand side of this channel, I would say Bitcoin is looking pretty encouraging to go north. The big milestone might be the 100K mark. Does that drag Ethereum with it? Remains to be seen. But we'll find out. Okay. All right. I think I can go for a few more minutes. So that's Bitcoin. Ethereum. Hopefully we cross over this 28.15 level. I've got a credit spread here on EETH. Copper, big pullback on copper. I might actually get that trade. I put a trade in on copper for March 2025. Let me debate this one. Let's go /HG. I don't think this filled yet, but let's find out. I've got a pending order at 0.025 credit. It's trading at 0.18, which isn't really that different from last week. Do I like this trade enough to take it? So basically what I was looking for is if we pull back on copper, to me, this looks pretty good for a pullback. Now, the question is, do I get filled at the price that I want? I'm willing to go kind of a 1-to-1, getting 625 reward for 625 risk. I'm letting price come back to me. I'm not just chasing. Obviously, you can see there's a pretty meaningful pullback off of today's candle on copper is pretty volatile. So if we settle back into this left structure, hopefully this trade gets filled. So I do like that trade. I'm going to keep that one pending for right now. Okay. Michelle says, can you look at gold short targets? I just did. 25.25 would be my first gold target. If I'm short on gold, I'm looking to see if this comes back to like 25.50 or 25.25. All I'm using is a daily time frame with a 50 exponential moving average. That to me is the one kind of dynamic support level I'd like to see in the near term. So that's my target on the higher time frame. Okay, anything with the Japanese yen? Choppy. How about the Nikkei? Wow, look at that. That's a big fake out on the Nikkei. I had some traders last week tell me that the Nikkei was down. I saw over the weekend that the Nikkei futures was down. So yeah, I mean, we're just getting a lot of volatility here, right? Is it choppy right now? I mean, I think that the market for the Nikkei is going to have a heck of a time finding a way to break these highs or break these lows. Don't be surprised to see just a lot of volatility in here where it doesn't break these highs, all-time highs, by the way, doesn't break this August 5th low, and the Nikkei is just very challenging to trade. I don't mind taking longs on the Nikkei if we come down to the support levels, but in the middle of this, I'm not trading the Japanese yen or the Nikkei right now. Okay. Michael's asking pound dollar daily chart. Yeah, I'll take a look at it. Anything else? NVIDIA back down to the middle. This son of a gun. I've got this trade out to October 4th, which is this Friday. I might end up taking a loss on NVIDIA. I did have a profit on the Qs. I did have a profit on the, or a small profit on the SPY. It was like break even by 5 cents. NVIDIA, I'm trading right back in the middle. This is annoying. I want to see some volatility out of NVIDIA this week. I don't know if we're going to get it. Let me see what this one's trading for right now. Hopefully it's not down a ton. Oops, I don't need to go /. Let's go NVIDIA. So NVIDIA right here. October 4th, 1, 2, 3, 4, and it's trading for 538. I'm down about $3 right now. So I could take the small loss in NVIDIA, not worry about it. The expected move to the downside, 116, 117. Nope, that's not right either. Son of a gun. Well, I think the smart play. So I don't see us necessarily getting back to the high. If we crumble to the downside, maybe there's a chance I can get this trade to be profitable. But I think I don't know. Look at this. NVIDIA, this is ridiculous. So talking about that daily chart, holy crap. Look at this 200 exponential moving average. We haven't touched this thing in 426 bars. I hate to say it, but I should be staying bearish on this thing. The question is, how can I get this trade to be bearish without paying an arm and a leg for it? I think what I might end up doing is if I exit this trade for a small $3 loss, and then I look to get in for a put that challenges that 200 exponential moving average, that might not be a bad play. I could probably do like a $100 put. Let me see. I think I'm going to close this trade out. Let me see if I can get like 545. All right, let me put in a 545 debit. I'm going to manage this trade out. If I have to go, guys, let me know. I'm not sure if I have a guest on afterwards. What I'm going to do here is I put in, it's basically a trade that was directionally neutral. I was looking for some volatility. Even up here at 127.50, it was trading for like $9 and change. Obviously, in hindsight, break even would have been better, but I thought, yeah, we can maybe stretch up towards like the 129, 130. I didn't end up taking the profit. So I'm just a few dollars off of my center price. I've got some time premium left in the trade, but probably something I need to evaluate and make a decision on. I think it's better just to take the small loss and reposition. I do like NVIDIA, at least in the, let's say the next 45 to 60 days, trying to find a way to revisit this 200 exponential moving average. So, and maybe it's from like that high. But I think what I'm going to do is look at trading some out of the money puts and see if price just makes a move down towards that 200 exponential and hopefully land a couple of extra profits on that. So if I can take a $3 loss now, I can probably easily make up with that for maybe like a $5 to $7 to $10 credit if I can turn some long puts into some profit. Okay. Technical analysis, Fed cuts. How will you time the continuation? It's probably seasonality. I don't think the Fed is going to move the market nearly as much as the current news. Like we've got employment, inflation, earnings, and the election. That to me is a much bigger chunk of catalysts than the Fed. The Fed has already played its cards, right? The Fed has cut rates. The Fed is going to continue to cut rates. It's there, and the market loves it. But the market still probably needs that little, like if the market is on a bike and it needs this extra news to like let go and let the market kind of go on its own and pedal by itself, it probably needs The training wheels right now are like all these things that need to come off. I think the market is kind of priced for perfection to see that we have to have stable employment news. We have to have stable inflation news. Earnings season can't disappoint, and the Fed will continue to cut through the end of the year. I think the Fed is going to like really be put into a corner like Q1, Q2 next year. If inflation data is not getting lower, I think all of a sudden the market's going to start sniffing out some trouble, because all of a sudden the Fed keeps talking about this 2% inflation rate, and we might never get there. Does that make sense? So anyway, all right. So what's left for my day? I'm gonna probably take off. I will take off this Nvidia trade, take the small loss. I do want to price out something right now, though, before I start exiting that trade. If I just price out, let's go through the election. We've got earnings season on the 19th. Oh, that sucks. I have to buy it to the 20th. I don't want to do that. Maybe before earnings season, could I see Nvidia down to like a 110? I don't know how expensive it's going to be. What's a 110 put? It's going to cost me $4. It's not the end of the world. I could do a 110 put. The value on my trade, if I get to the 200, we're trading under $100. If I did a 110 put, okay, a 110 put, and I'm long, and we get down to $100, let's say that's a $10 credit, and I pay about $4 for the debit. So I can get $6 of net profit. If it happens fast enough, this might actually increase and gain more in value. I don't know, but something along those lines. I'll debate whether I want to take that trade. 110's not bad. 109, I mean, maybe stacking up a couple. I might do like a 109, 108 and stack up just a couple of small ones and see if I can turn like a $7 debit into like a $10, $12, $15 credit. If that's the case, great. And obviously I'll make up for a little small, $3 loss that I would take on that kind of neutral direction. So, all right. I think I'll kind of wrap things up for my session for today. The one trade I'll be watching, as I mentioned earlier when it came to the session, I'm watching this futures trade to make sure. Oops, let me go 1, 2, 3 here. So this is live price where this little flag is at, oscillating. I want to make sure that if price is coming back into my profit trap, that I can turn this into a credit. Right now I've got about 275. I took $3 net credit last week on a 285. I got a little bonus there, and I've got a 275 for this one that I can take most of the profit right now. But if I can turn this into an extra, let's say 15, 20, 30 cents credit, obviously I'd like to do that and make a little net win there. Okay. So I'm going to keep the ES trade open. I will take off the Nvidia trade for a small loss. I'll probably stack up a couple of trades on Nvidia. The only thing I don't love about that trade on Nvidia is if I have to go out through November 15th and earnings on Nvidia is the 19th, I don't necessarily get to play the earnings move. Not that I want to be in front of Nvidia earnings if it's going to be good, especially. But if we have Nvidia earnings on the 19th, maybe that's not a bad thing. Maybe I just get through the election drama. If the market pulls back in any way, shape, or form, Nvidia will go. I mean, if the market pulls back as a whole, Nvidia is probably going with it. So maybe I don't need to trade earnings along with everything else. But I want to go out far enough that there's at least some volatility out there. And I'm not trying to be perfect on the timing. Get through employment, get through inflation, get through the election, and let kind of let the market do its thing. So hopefully that 400 and some bar overstretch on Nvidia is going to allow this thing to find the support that I'm looking for. And I also think that's a good opportunity to buy too. I mean, if we come down to that 200 EMA, there's probably going to be an active, algo driven, like, hey, just buy the dip. It's 200 moving average. It's a great historical reference for dynamic support. But I think we can get there in the interim to actually go there directionally. All right. And then the Fed stuff. Yeah, the Fed is going to be cutting rates. Question is, are they cutting 25 or 50? And we'll find out. So right now the market's anticipating a 25 basis points cut for November. That's 2 days after the election. And then the December one is another 25 to 50 basis points. So we are literally talking another 25 to 50 basis points by the end of the year, maybe even 50 to 75 basis points by the end of the year, which is a very aggressive rate cut considering, in 4 months, the Fed is cut by 1%. That's a big deal. Does the market love it? Maybe, probably. The market does. The market wants to love it. I think the only issue is underlying. If we see softer jobs numbers, I don't think the market's going to be all that excited about the Fed cutting rates, because that means they're cutting in the wake of softening labor, maybe a recession right around the corner, which, all these things have been talked about in the last, couple weeks. Okay. All right. Look, happy Monday. Enjoy the rest of the day, and we'll be back here tomorrow as usual. All right. Thanks, everybody. If you want to subscribe to my alerts and all that stuff, I know that there's been links posted in the chat. It's an active Discord. There's lots of stuff that we're all trading between Elvin, Frank, Nick, myself. So check those alerts out. You can add just my portion. You can add the whole team, and it's a great deal. So we're here to trade. We're here to help, and we'll see you then soon. All right, thanks everybody. Bye.
Thanks for tuning in to today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. Also, we're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. In the live stream chat and description below, we'll drop a link to apply to be a live stream guest and join in on the conversation. We hope to have you on soon. That's all for today. Trade safe, and we'll see you next time.